so happy together.
Good morning, everybody. Happy Thursday. It's November 7th, 2024. Great to be with all of you today. Quick shout out to my mom. Happy birthday, Mom. She is 82 years young today. So thank you, everyone, for giving me some greetings in the chat room today. For her, I will let her know. So here we go. It's Fed Day. Welcome to Fed Day. Well, it started yesterday and it's going to conclude today. And with the policy decision by the Fed, the market is expecting the committee to cut interest rates by another 25 basis points today, following up on a 50 basis point cut from September. The market is leaning towards another cut in December, which is the last meeting of the year. Today is the 7th meeting in 2024. One more meeting in 2024, and then we'll get started in 2025 in February. But first things first, I think the market is a little bit ahead of the Fed right now, looking for another rate cut in December. I only say that because the Fed is not using forward guidance. What they're using is the data. And they've been stating this for months. They're going to let the data drive the decision-making process for them. And if the data is good, which means low inflation, good solid growth, then they can continue to reduce the restrictive policy that's been in place for about a year and a half, almost 2 years. So let the data drive it. So, but we know what markets do, right? Markets like to speculate. Markets like to get out in front, try and drive the action if they can. We saw something similar happen in the election this past Tuesday. A lot of the influences that were out there were especially money being bet on Donald Trump. They won, they made money, but a lot of that influence was there to help persuade people to vote a certain way. So the Fed is not going to get persuaded by the markets so much as maybe voters were on Tuesday. But we'll see what happens when the data comes through. We do have another jobs report coming out in the early part of December, and that will be the November jobs report. We have a lot of other releases coming out. This morning, we actually had a couple of economic data pieces that of interest to me. We had productivity came out at 2.2%, a little bit less than expected, but a bit better than the last quarter. 1.9% on the unit labor costs. That was hotter than expected, but less than what we had in Q2. And jobless claims a little bit less than expected and a bit higher than last time around. And the Bank of England, of course, if you were watching this morning, they kept rates. They brought rates down a quarter point from 5% down to 4 3/4. Kind of in line with what the Fed is doing. So we'll see what happens. Retail sales in Europe were real strong. I was watching that as well too this morning, and that is probably going to help drive the European markets over the next couple of days. So good news all around if you want to evaluate it versus the economy. Stock market, of course, had an enormous day yesterday, massive day higher. Small caps, large caps, mid caps, every cap was up on Wednesday on very, very strong volume. Now, what's interesting to me is the small caps, which were actually the best performer of Wednesday, better than 5%. Which again, it was curious to me as to why it was the best performer, because interest rates had gone way up. Now, if you recall in some of the discussions that we've had here or on a webinar or even in the chat room, the relationship between interest rates and the small caps is opposite. It's a negatively correlated relationship. What does that mean? That means when interest rates are rising, small caps are getting sold off. The opposite happens when interest rates are falling. Small caps are usually driving higher. So we had a very interesting situation yesterday where interest rates were rising, small caps were rising along with it too. I think that was more of just a spillover effect from a release of the heavy implied volatility that was being juiced in the VIX up until the election day. Now, if you recall, I talked about last week on Halloween that once the election was over, we were going to get a huge release of volatility to the downside. And that happened yesterday. We had better than a 20% move down in volatility. Now, today, the VIX is off 57 cents. We're under 16% over here. We're in a critical area right now, right? Between 15 and 16%. If we can get below 15%, that'll be below the 200-day moving average. We get another close below there. That will be a big buy signal for the market and a sell signal for the volatility index. We are into and heading through a seasonally bullish period for the markets and a seasonally poor period for volatility. What does that mean? That means volatility is likely to be subdued through the end of the year. Okay. So when volatility is subdued, people look at that as a signal to go ahead and get long stocks, start buying stocks, and because the market can go up unimpeded without a whole lot of worry with the volatility index, right? We'll see what happens. I think after today's Fed meeting decision, we're going to see that release of volatility. Is it going to go down to like 11%? Well, not today, but well, I'm not going to say never. Never say never, right? It could happen, but highly unlikely. Maybe we go down another point and a half, maybe it's 14%, especially if the market really likes what they hear from Chair Powell and from the notes from the Fed when they release their message. Now, a couple of charts I want to share with you. We do see actually the market's up a little bit this morning, actually a little bit mixed. The small caps are down slightly. We're seeing the Dow Industrials down a little bit over here. The NASDAQ is strong. A couple of names that we did have in the chat room. I had this app 11. This thing is up 35% here. So we had, just to let everybody know, this is the stock I bought. I added in the chat room on Tuesday. Was it Tuesday? Yes, it was. Okay. So you can see here, everyone see this here? Christopher put it in the Bob's Trades. Small ad on the app, December 6th, 175 calls at 10:20. Expensive call, right? Well, let's do the math here. 175. Stock's at 228 right now. That's about $53 in the money with a little bit of time premium on that. These $10 calls are going to probably open up at about $55 today. So 450% gain on these in about a couple of days. Where are you getting these at? In the chat room, of course. One contract of $1,000 would make you $4,500. One contract. How about what if you bought 10? What if you said, okay, I'm gonna play big. I'm gonna buy 10 contracts for $10,000. It would make you $45,000 just on the one trade. Just on the one trade, and it was there. Everybody had an opportunity. You saw when it was posted on November 5th, right? So, I'm sorry, November 5th. It was on Tuesday. So, anyway, so that's the chat room. If you're not in the chat room, you're missing out. Sorry, I'm sorry to tell you that. So, take a look at our chat room. Hopefully, you'll be able to join us sometime soon. A couple of charts I want to show you today. S&P 500. Look at this thing. This thing just what an incredible move this thing made yesterday. After nearly you could almost call this a funky looking Morningstar pattern with the red bar, but we didn't have the immediate doji. We had the doji on Tuesday here, but then we flashed higher on Thursday or Tuesday, and Wednesday with that big move. So this is Monday, the doji on Monday. Nice white bar on Tuesday, and we have a big follow through day on Wednesday. So we're looking for a little more follow through today to the upside. Looks like we may get it just to get towards the 70 level on the RSI. If we get up there, there's probably going to be a good spot, good area for you to take some money off the table. Breath yesterday, not so hot. you would have expected with the indices up anywhere from 2.5% to 5%, the breadth would have been lights out strong yesterday, right? But take a look at this. It was only 17 to 10 on the New York Stock Exchange. So there was actually some selling going on during the day. I think mostly people were caught looking the wrong way, and also we had a lot of volatility that was released. Let's look at that VIX chart yesterday. See what I'm talking about. Look at that pop down to the 200-day moving average. Now that 200-day moving average is important here. It's at 1579. We get a couple of closes below there, which we couldn't quite get in August, nor could we get that in September. Okay. But you can see what happened back earlier in the year when we popped in April in volatility, came back down, and then tested that 200-day moving average and then finally pushed through it. Boy, did we have a big rally in May and June. While the market was moving higher, the VIX was sitting below the 200-day moving average. That's bullish, right? So we're at a very important, critical point here for volatility and for the markets right now, because if we start trending down below that 200-day moving average, you're going to see a swarm of buyers coming into this market like you've never seen before. So that's something to pay attention to. Also, this is a chart we haven't looked at for a few weeks. This is new highs, new lows. Big, huge numbers yesterday. Huge numbers. We closed at 422, highest level we've closed at in quite a long time. You can see up there, we did close at 380, 400 back in September. Really good, healthy, strong, bullish prints, and then New York high-low list, right? Remember what we say? Let me box this up here. We like to see prints above 0, right? If we get below 0, we start making lots of prints below 0. That's bearish, and we're worried about the markets going down even further. But that's nothing to worry about. Certainly since July, we've had all these strong new high versus new low prints going back for the past 5 months. So we'll see if that continues on. Certainly yesterday did nothing to dissuade that argument that this is a bullish indicator right now. Let's see. I'm going to take a look at a couple of other charts as well. One chart that I'm doing for The Street and Real Money Pro today is the trade desk. They have earnings coming out. Look at this beautiful breakout here. Higher highs, higher lows. Nothing wrong with this chart whatsoever. Also looking at ANET, they will be reporting later on today. Had a huge breakout yesterday on really good volume. Get a little follow through on that today. We could see a little bit more movement, maybe up towards 450, 475. I'm also looking at another name that's reporting today is Square. Okay, this popped really nicely, and you can see the formation of a nice cup and handle pattern over here. Even an inverse head and well, first we see a couple of bullish patterns over here. Well, we see the inverse head and shoulders, left shoulder, head, right shoulder there, broke through the neckline. Put that in there. Well, broke through that neckline over there, and then we pulled back up. And then we have another pattern here, another cup and handle pattern, right? So we got this over here, got this over there, cup with a handle over here, and a breakout above that handle. That is hugely bullish for this stock. So where could this stock go? Probably up towards the 100 level before too long. I don't think it's going to happen tomorrow, but you never know. Never say never. But this is real strong. I mean, I think certainly 85 to 90 is in the cards in the next couple of days for Square block. So take a look at that one. Another couple of names that I've added a little bit to as well too in the similar area as a firm, which is a very, very strong chart yesterday. Bill.com, they're going to be coming out with earnings tonight. Take a look at this one. Huge volume yesterday, big breakout, and you like to see these things breaking out on heavy volume. Hella bullish for that particular stock. So tomorrow, not much going on tomorrow other than the fact that we've got some smaller names. We got Sony coming out. We've got Embraer, Fluor, so a couple of industrial names coming out, Bloomin' Brands, the restaurant. So pretty good stock market right now. What I will warn you and caution you on, always have some cash available, always have some reserves there, have some protection on. I know the protection wasn't helpful yesterday, but certainly if you had a little bit of protection on, it helped you buy some more stuff. That's what it does for me. If I have some protection on, I know it's there just in case the market does come down. And I'm able to add some positions slowly as I see them. My eyes are wide open when I have some protection on and I'm not jaded by what's going on in the markets. I was fully aware that the markets were going to gap up yesterday. I knew that late Tuesday night and into Wednesday morning. I knew that was going to happen. But my strategy here was, how was I going to handle that? How was I going to manage that? And the best way for me to manage that was to have some protection on. That allowed me to free up myself, and as long as I had some cash available, which I always do, to go buy some new stuff, right? Buy some new trades. It turned out to be a great day yesterday. So hopefully it was for you. If you missed the webinar yesterday, we'll be having the replay of the webinar out later on today. I think that was a fun webinar. We had a lot of people in there asking some questions about some certain names. If you listen to the webinar, you might find some gems there that we discussed on the charts, and you might be able to make some money off of some of those. So I'm going to lay it down there. Have a great day, everyone. I appreciate everyone spending a little bit of time with me today. And please send this out on social media if you have a chance. And have a great trading day. Have a great weekend. Trade well tomorrow. If you're in the chat room, I will see you there later on today. Thanks, everyone. Bye.
How they tossed the dice, it had to be. The only one for me is you, and you for me. So happy together, so happy together.